You know, folks, the whole world is talking about Bitcoin. Want to know why? Maybe it's because Bitcoin rose in value over 150% last year, and this is just the beginning. Bitcoin is online investing that anyone can do. Visit bitcoinuniversity.org today. Take a master class. Download the Book of Bitcoin and take your investment portfolio to the next level. Visit bitcoinuniversity.org and discover all that a Bitcoin can do for you. That's bitcoinuniversity.org, bitcoinuniversity.org.
Now, back to the Larry Kudlow Show.
So, apart from the election, a lot of new economic statistics came out in the last couple of days. We got retail sales. We got consumer spending. Let's see, retail sales. We got industrial production, manufacturing. What else did we get? We got the CPI and the PPI. One of the best of the Wall Street economists, my dear friend Conrad DeQuadros, senior economic advisor for Brean Capital, founding partner for RDQ Economics. Conrad, thank you. I'm looking at the Atlanta Fed GDP now. They're saying 2.5% growth in the fourth quarter. It seemed like things were sloppier than that, particularly manufacturing. And retail sales actually fell for the control group. I don't know. What do you think about this? What's happening out there?
Well, thanks for having me on, Larry. We had a mixed bag of data last week. On the retail sales report, it was a little softer, but it does follow some pretty strong readings in prior months. So we're looking at a decent gain in consumer spending in the fourth quarter. Not as strong as what we saw in the third quarter, but we're starting off at a pretty decent pace. On the manufacturing side, we had some weakness, but there we have to remember that there was the disruptions related to the Boeing strike and also the hurricanes that both the hurricane that hit in September and then Milton, which hit in early October. So those factors did have an impact on the manufacturing data, but generally the manufacturing data have been quite soft. So it was depressed because of the hurricanes, but it doesn't really take away from the picture that the manufacturing sector has been somewhat depressed in recent months.
What about the CPI, which sort of brings you to the Fed? It just seems like we haven't made any additional progress towards the 2% Fed's inflation target, which brings me to ask, what's the Fed doing? Jumbo rate cuts in September, 50 basis points, another rate cut in November. I guess the market is pricing in another rate cut in December. The one thing I don't want here, I don't want the Fed to go too fast, start pumping up the money supply, give Donald Trump a big inflation problem in his first year. I mean, what's happening with this inflation story?
Well, Larry, we're on the same page on that inflation outlook. And it's a different outlook than what the Fed is presenting. The Fed continues to talk about it's making progress towards its inflation target, and that's why it's cutting rates. And I just see in the inflation data, particularly the report that came out last week, a lack of progress on inflation. Inflation is still high. It's too high. And in fact, if we look at some of the underlying measures, it hasn't made any progress in the last 4 months. So I do question the rationale about cutting rates pretty aggressively. Now, the market has backed off the expectation of another rate cut. It's more like 50-50 now. Prior to the CPI report, the market was leaning towards another rate cut. But I think that this aggressive pace of rate cuts that the Fed has been on is not consistent with the inflation data that we're seeing that are still showing a picture of prices rising at too fast of a rate.
You look at this thing for the past 4 years or so. I was reading Tip and Sight, the old Investors Daily stuff. So the inflation cumulatively rose by about 20.5% last 4 years. Real weekly wages have fallen about 3.5%. My point here is, Conrad, that prices don't seem to ever fall. Middle-income people, lower-income people, working folks are stuck with higher prices. The aggregate year on year may look better, but the prices themselves are not falling. They're just rising more slowly. And there was a time when the Federal Reserve talked about, say, if you had inflation overshoot for a long time above their 2% target, then you could go for an undershoot. I mean, instead of 2% after the last 4 years, why don't they aim for like 0 to 1%, and maybe prices will come back down in some cases?
Well, I think, Larry, in a lot of cases, that reflects the inflationary bias that central bankers have and that a lot of economists have. They don't recognize that inflation is a tax on consumers, that the public hates inflation. And so the target of the Fed is not trying to get prices back to where they were after the surge of inflation that we had over the last 2 years. They're just trying to get inflation to rise at a more slow rate. And so what that does then is it bakes in those price increases that we've had in the last couple of years. My opinion is that central bankers and economists are too scared about falling prices. The public actually has no problem with falling prices. If you look at Japan, the example of Japan and that period of deflation that the central bankers are so worried about, the public were actually quite happy with prices that were either rising very slowly or falling by a very slight amount. But economists and central bankers particularly are worried about rapidly rising prices, and that in parts a bias to their policy, and that does create the problem that you just discussed, that prices go up rapidly and then central bankers just say, well, it's okay if they continue to rise slowly from there, rather than try to return to the prior trend line of price gains. I
mean, you could have, any time economists talk about deflation, you get all these people, it's going to be the 1930s, it's going to be the Depression. That's not true. This is not the Depression. You could give some relief if you had a mild deflation, for a year or two or something like that. You'd give some relief to, we call them consumers, but when you look at, they're basically middle-income people who have had a hard time making ends meet in the last 4 years. Okay, that's what you're aiming at. Now, I don't want to politicize this altogether, but that was a constituency that voted for Donald Trump. White working class, black working class, Hispanic working class, etc. It crossed over racial and ethnic boundaries. People were hurt by the inflation, the big spike in prices, up almost 21%. So why not deflate a bit? You're not hurting people, you're helping them. And all of a sudden, their paychecks, their take-home pay would go up in real terms. I mean, that's where the rubber meets the road. You want take-home pay to go up in real terms.
I think you're right, Larry. And the frustrating part is that central banks actually know this. You talked about the Great Depression. The Fed has done these studies and looked at 80 deflations, and there's only 2 instances in which they were bad deflation, the Great Depression, and then they also judged Japan to be bad. Otherwise, the economy did fine when prices were falling just a little bit. But I think I'd be very surprised if central bankers start to target that.
I know. Conrad DeQuadros, Senior Advisor to Brean Capital.
Eden Memorial Chapels understands Jewish funerals can take many forms. Some are Orthodox, while others are more conservative or of a Reformed nature. There's no one better. With services close to all New York and New Jersey cemeteries, Eden Memorial Chapels offer fair and balanced pricing and can provide easy transfer of you and your loved ones to Israel. While you're grieving, they're here to take care of all the details so that you deal with less bureaucracy and have more peace of mind. Go to EdenMemorial.com. That's EdenMemorial.com.